Will Bitcoin hit $100,000? Right off the bat, I believe it will go significantly higher than $100,000, probably closer to $1 million. However, I am admittedly pretty biased on the subject, and rightfully so. We recently had the soft launch, if you will, of a Bitcoin spot ETF thanks to Blackrock. Now, the ETF has not actually been approved, so hold your horses. All of the price appreciation so far has been driven from speculation because of a very important event, a very important milestone in the launching of this ETF. The ticker symbol for the ETF has been listed on the DTCC. Thanks to our boy Eric here, who is a reporter for Bloomberg Terminal, we can see the iShares Bitcoin Trust has been listed on the DTCC, the Depository Trust and Clearing Corporation, a corporation which assists in companies and organizations bringing to market new ETFs, new products. This guy, Eric here, he reports on that across the board. So he's not specific to just crypto. He is very specific to tracking new products to the financial markets. You can see right here, IBTC, which is a phenomenal name given BlackRock's iShares company name. All of their products are from iShares, so IBTC is very easy, especially for the boomers, to be able to understand what it is that they're likely getting in their pension funds, because the listing of a spot ETF is monumental for all of Bitcoin. It adds a layer of liquidity that will soften volatility for Bitcoin's price and give access to people from traditional financial markets, TradFi if you will, to allow for some Bitcoin positioning in their portfolios. So pensions, hedge funds, money markets, retirement accounts, these will all now have access to holding some Bitcoin if they want to, right? It's not mandatory, but it is expected that hundreds of billions of dollars will flow into Bitcoin over the coming years. And part of the initial launch of this is that BlackRock has to accumulate some Bitcoin for a very soft launch. They need to have a little bit there for trading. And truthfully, we knew this was coming, especially if you've been paying any attention to the things that I've been posting. You know explicitly that BlackRock has a 99+% accuracy rate, hit rate, when it comes to getting their ETFs approved. And only one has ever been denied. We're talking in the hundreds. So the idea that this would be any different, when BlackRock wants something, they get it, no questions asked. And I even have a video here to show, just to kind of express this to you guys. You are going to give your Bitcoin to BlackRock, and you're going to say thank you for them taking it. Here's an accurate timeline for BlackRock's Bitcoin ETF. I mean, let's face it, BlackRock has a win ratio of 575 to 1 when it comes to approval odds for ETFs that they apply for. Ignore the fact that the SEC has about half dozen applications for Bitcoin spot ETFs, and just go ahead and compare ARK's ETF deadlines to BlackRock. On May 15th, ARK Invest applied for a Bitcoin spot ETF, and don't worry about it, I'm going to put a screenshot at the end, so save this video and you can have the complete timeline. 45 days from then, on June 29th, it's expected that they will have the first extension of 45 days, because the SEC and the United States just loves kicking the can down the road. Well, a few days ago, BlackRock applied, and if they follow the same timeline, then in mid-August, they'll get the first 45-day extension. I was wrong there. It was the end of August they got it. Then there's a 90-day extension, followed by the final 60-day extension, meaning that January 10th, we will likely have the final verdict on whether or not ARK Invest gets the first ETF for Bitcoin. And in February, the iShares ETF, or the BlackRock ETF, will either get approved or denied, which is perfect timing because the supposed halving for Bitcoin comes in March of 2024. You wanted institutional adoption? Q1 2024. When did I post that video? Just curious. I posted that literally 4 months ago to the day. And I have a short clip for you to play from Corey here talking about an accurate timeline for when to expect this BlackRock ETF.
And Corey, there's a lot of enthusiasm from crypto fans about the SEC possibly approving a spot Bitcoin ETF. Bottom line, Corey, do you think the SEC is going to greenlight a spot Bitcoin ETF? And if so, Corey, when do you think they make that decision? Is that this year? Is it early next year? What do you think the timeline could be?
I do think it's pretty much an inevitability that it's going to happen, and that there'll be a batch
Okay.
of them at about the same time, and then they'll
That's cool. Thank you, computer.
What do you think the timeline could be?
I do think it's pretty much an inevitability that it's going to happen, and that there'll be a batch of them at about the same time, and then they'll compete it out to see who becomes kind of, who's the Bitcoin version of the queues for S&P, for instance. So that's what they'll be spending into, these big companies with their listings. As far as timing, I have been handicapping it as, basically Q1, but it does seem like there is a smaller chance, obviously, of it happening sooner. I would place my bets on Q1, though.
And Corey, what effect, if and when these ETFs are approved? It's not as just that it creates the product and people invest in it, but one would have to think that these big firms are going to be trying to push clients into these products. I mean, what kind of effect do you expect? Bitcoin?
That's right. Yeah,
that was a good question.
The biggest effect of the ETFs is going to be that the top of funnel for the investor class is going to change from something that is contra Bitcoin, which is all of the, the crypto scams and pump and dumps of the last 6 years, FTX and the like, and all these wannabe altcoins. That's generally what has gotten people into Bitcoin, because they've been able to print their own money and sell it with marketing and all this VC funding. And then it takes people a year or two often to wade through all of that false marketing noise and find out what really is the signal in the space, which is Bitcoin and Bitcoin only. And now you're going to see a new era where some of the most credible, some of the most well-funded, some of the most trusted brands in the world are going to be shouting from the rooftops with tens and maybe hundreds of millions of dollars of marketing expense, just talking about Bitcoin and putting all of the Bitcoin authors and podcasters and executives.
Cool. How much money can we actually expect? Where is this going to drive Bitcoin? Well, CoinDesk here put together a pretty good article of spot Bitcoin ETF approvals could add $1 trillion to crypto market cap. That $1 trillion, that is an excessive amount of money. They're expecting somewhere around $155 billion worth of inflows directly into Bitcoin. At least Crypto Quant's model predicts that, which I think is very realistic. If you think about how much money these large institutions have to actually play with, Cathie Woods has some outlandish price predictions for Bitcoin that are based off of models that her team has put together at ARK Invest about what happens if all the hedge funds globally were to put just 1% of their funds into Bitcoin, a 1% allocation into an asset, which is extremely small. Extremely small. What happens if just the United States puts 1% or 10%? Some of her price predictions get into the multi-millions of dollars per Bitcoin. We're not talking that. I believe that during this next cycle, barring any massive red flags coming from Gary Gensler, which at the time of recording this, literally I just got a notification on my phone saying that the SEC is suing Blackrock for not disclosing their acquisition of some Bitcoin, which I think is ludicrous because we've known about it. They 100% disclosed it, but that's not for me to say. It has had zero impact on the price of Bitcoin, which is hysterical. Like genuinely, I'm going on a little side tangent here, but genuinely, when you think about what that news actually is, the SEC, the group in charge of all regulation for securities, just trying to sue BlackRock for this. It's silly that it had no impact on the market. But the SEC, and namely Gary Gensler, is losing a lot of credibility in the space, especially in crypto. I think that his days are kind of numbered for being a large influence in the markets for the cryptoverse. Especially when you think about the fact that recently he had said, we don't need a digital currency, we already have one. It's called the US dollar, which a lot of crypto fanatics are laughing hysterically at that. But I will say the dollar is effectively a digital dollar at this point. It's just extremely insecure. It's not secure at all the way that it's functioning. And you see banks taking advantage of that, whether it's using someone else's personnel to open up fake bank accounts, or you see banks literally just barricading off people from their hard-earned finances, cutting out people from the financial system, which is essentially death. If you can't have access to the global financial system, you lose everything. You lose everything. Every recession, every time the unemployment rate spikes up, you see a massive amount of death. It's a direct correlation, and that's because if you don't have access to money, you don't have access to food, to shelter, to healthcare, all that stuff. It's very dangerous. And so when you see banks just kicking people off, just like in Canada, I know this is not the United States, but in Canada, when they had those truckers rallying, the largest convoy in human history, and their solution was just to cut them off of the banking system, Bitcoin doesn't allow that. Now, if we look at what you guys came here for, is some price predictions. In my opinion, we will see Bitcoin follow the 4-year cycle once again. This is Bitcoin's entire pricing history. You can see it's starting all the way back here in October of 2009. The emails that started Bitcoin, when Satoshi sent out the emails, came on Halloween of 2008, the scariest Halloween ever for the financial system. And it didn't start trading until the following year, the beginning of 2009. If you take the bar pattern after the first halving, from halving till halving, and overlay it with the current halving, you will see that Bitcoin followed the exact same exponential increase. You'll see the very first run, we had a couple hundred days of Bitcoin after the halving rallying up 2,165%. That was the first halving. This halving that just happened back in 2020, you'll see that Bitcoin rallied 538%, but also took the same 200 days, right? Give or take 100 days. This cycle was prolonged compared to the first one, and it took an extra 100 days. But then we put in a second peak right around the same time, just law of diminishing returns. As an asset class gets bigger and bigger, it's going to take more and more money to move it, so the returns go down, but the timeline stays very much intact. You'll then see that it lined up, the bottom lined up almost exactly with the bottom from the first cycle, and then we slowly rallied into the next halving event. The same thing is occurring here. If we put the 2013 cycle aside and take the 2017 cycle and go ahead and overlap it here, you will see that we didn't have that initial first spike, but what we did have was just one continuous run up in 2017. So the spike here was very similar to the 2013 style bull run, but the timeline again lines up very accurately to when we had a peak. The peak came in the 2017 bull market 560 days after the halving. The peak for this last cycle came 504 days. So pretty similar on a giant macro scale. Being off by 2 months is really nothing to write home about. And then we had a bottoming period, and that overlapped again the exact same. It's shocking how similar these cycles are lining up, followed by a rally into the halving. What's happening right now is the exact same thing. We had a rally, followed by a pullback, a bottom around the same period, and then a run up into the halving. I believe we will see the exact same thing play out once more, and I think the macro environment is honestly lining up to be supportive of my theory here. It's not even my theory, it's a very well-known theory, but not to anyone who's new to the crypto market. And this ETF is bringing a lot of new eyes into crypto, so it's worth noting, it's worth going over. After the halving, roughly 500 days is when the next peak happens. This has been consistent throughout the history of Bitcoin. So the halving taking place in Q1 of 2024, right at the end, if not the beginning of Q2, the next 500 days puts us somewhere around November of 2025. In November, or at the end of 2025 rather, Bitcoin will be somewhere north of $100,000, if not north of $130,000, which is a pretty large run up from its current price of $34,000. In summary, we have one of the largest, if not the largest asset manager in the entire world, which has, I think, $7 trillion worth of assets under management, applying for an ETF to allow access for pensions, hedge funds, retirement funds, the broader traditional finance market to have access to cryptocurrency, namely Bitcoin. I think down the line we could look at some other cryptocurrencies getting some spot ETFs, but I don't think that's anywhere anytime soon. Right now, we are having the floodgates open for Bitcoin potentially as early as this year, if not Q1 of 2024, which lines up really well with the macro cycle of our economy. You can go see that Fed futures are predicting that interest rates have peaked out at the current rate of 5 to 5.25, and by the end of 2024, they're expected to be cut by about 1%. That's dramatic because an ETF launching at the peak of interest rates is when it's literally the least likely to get mass adoption at that point. So as interest rates continue to come down and it becomes sexy, if you will, to take higher risks, then asset funds will try and look towards something to bolster some of those returns. The rate of risk-free return is that 5% interest rate that they're set at. Bonds will yield 5%. Who has millions of dollars that is going to look at anything other than that 5% guaranteed rate of return? When that starts cutting, they want to subsidize those returns with something like Bitcoin. So as rates continue to get cut, which they have to, it's the only tool that the Fed has for supporting monetary policy and fighting deflation, but I don't want to get into that in this video because that's a very, very long video for me to give my 2 cents on the fact that we are headed for deflation. That's a massive threat over the long term. Yes, we're fighting inflation right now, but in the long term, deflation is the threat of an innovative society. And the only way to combat that with the Fed right now is to cut rates and turn on the money printer. Your time is your most valuable asset. Hopefully this video was worth investing into. The only thing that I could see throwing this off is if we have World War III. If World War III breaks out, we're gonna have a massive crash, then probably a V-shaped recovery as they do the exact same thing they did during the pandemic and print tons and tons of money, which just causes massive inflation. So I'll see you guys in the next video. Make sure you like and subscribe.